Dividend Aristocrats have paid and raised their dividend for 25 consecutive years or more. So these are amazing companies with big cash flows that reward their shareholders. These are the top 5 Dividend Aristocrat stocks that I'm looking to buy for 2023.
All right, so the first aristocrat that we're going to be looking at is Genuine Parts Company. The ticker is GPC. This is a 1-year chart up here, and you can see the stock is right around $185. But what makes this stock really special is it's in an uptrend. We know that the market is in a bear market. This is one of the few stocks that are actually in an uptrend. That is what you want to see. You can see that the dividends, I've got all of them listed over the past few years with their earnings. They continue to increase year after year. So if we go back here, you're looking at March of 2018, they paid 72 cents per share for that quarter. You know, we fast forward here, we're looking at December of 2020 of 79 cents. And then last time they paid a dividend was September 1st, 2022 of 89 cents and a half, right? So they continue to raise that dividend and their yield is right around 2%. So it's not too bad. That yield is obviously collapsing as the stock is ramping higher. A couple of other things that I want to point out, the stock is definitely outperforming the market. You can see that here over the past year. And then last but not least, the next 12-month PE is a little elevated compared to the market at 21 times.
Let's do one other spot check on GPC. It does have the big money flowing into it. All of these bars, these green bars, that's telling you that the shares are ramping higher as volumes are increasing. That's what you want to see in a leading stock. And then obviously over here to the right, we've got 2 blue signals. That indicates this stock is one of our top ranked stocks over the past year. So we really like this move.
And number 2 Dividend Aristocrat is going to be Archer-Daniels-Midland Company. This is one I've been paying attention to this past year because we all know that food inflation has been a hot topic. Archer-Daniels-Midland Company is one of those companies that benefits from that, right? They are selling seeds and commodities, right? So that means their margins are going to expand in this environment. So the stock price right around $97, and we can see that their last dividend was 40 cents per share. You know, if we go back a couple of years, looks like the dividend was 36 cents. It was 33 and a half. So clearly the dividend is rising, which is what you would expect with an aristocrat. Also, there's a lot of leadership with this name because it is greatly outperforming the S&P 500. It is well above its 50, 100, and 200-day moving average. And I like this. It's got the next 12 months PE of 14. That's cheaper than the market, which is right around 17 times.
And let's do a quick spot check on those investor flows for ADM. Again, we do see a very solid uptrend. This is a name that we have been all over in our research, and because when you see dozens of times where the stock is ramping higher, volumes are increasing, probably there are big investors getting involved in the stock. You can see that lately there has been some demand for the shares, and it has been a well-known name in our top 20 list. So that goes to tell you that, you know, this is a great stock to potentially look at for 2023.
Let's keep going. The number 3 Dividend Aristocrat is none other than Chevron. So ticker is CVX. We can see that the share price is right around $185 right off the bat. Very solid uptrend. Listen, you know we have been all over the energy move. This is one of those solid names that just continue to outperform in this market. We can see that their last dividend was $1.42 per share per quarter. And you know what? It continues to increase year after year. It was $1.29 back in 2020, and then it was $1.12 back in 2018. Now, as the stock continues to go up in price, we would expect that the yield is going to collapse. And that is what we see right now with just over a 3% yield, but that is still attractive in this tape. I do love the outperformance of this stock versus the market. It's well above those moving averages. That is what you want to see. And probably the most impressive thing is that the next 12 months PE is at 10.4. So it's extremely cheap relative to the market. If energy and commodities stay elevated, Chevron should do well in 2023.
You know, we got to do a spot check on this name, and look, the big money has really been all over the energy patch, especially Chevron. I mean, these are dozens and dozens of green signals. This has been the top ranking sector energy stocks in all of 2022, and Chevron's just one of those high ranking names. And we can see early in January and in February, this was a top ranked stock on our top 20 list. So listen, bringing it all together, strong technicals, strong fundamentals, Chevron is one of these names that could do well in 2023.
And the number 4 dividend aristocrat that I'm looking at for 2023 is going to be AbbVie, ticker ABBV. Full disclosure, I do own this in personal and managed accounts, and the stock has really started to form a nice little uptrend over the past few weeks. Stock price is right around $159. But get this, the dividend is $1.41 per quarter, and it has been one of the strongest stocks in 2023. You can see that with this uptrend. And if we go back, we can see that back in 2021, it paid $1.30 per quarter. If we go all the way back to 2018, it was 71 cents. So that's what you want to see, is just increasing dividends, right? That yield is just under 4% at 3.72%. That's very attractive these days, especially with a company that's poised to continue to raise it year after year. Seeing a lot of outperformance, which comes as no surprise. Healthcare, very defensive in this tape. Now, its next 12 months PE is still cheaper than the market at 13.34 times. Now that is elevated looking at a 1 year, but if you look at it versus the market, it's relatively cheap still with this rally.
So I love the numbers out of AbbVie. It's just one of these solid names. I think healthcare exposure makes a lot of sense going into an uncertain year in 2023. But my, oh my, this stock has seen a lot of inflows this year, especially early on. Then it came under pressure, just like a lot of stocks did. That's what these red signals are indicating. But we're starting to see that money is going back into some of these stronger, high-yielding healthcare stocks like AbbVie. And is it a high-ranking stock? It is. It has been on our top 20 list 4 times over the past year.
All right, and the number 5 dividend aristocrat that I'm looking at is Walmart, ticker WMT. Full disclosure, I own this in personal accounts, and look, it's just a staples company, man. Everybody goes to Walmart. When money's tight, you go to Walmart. It continues to be one of these companies that thrives year after year. The share price is $152, and now look, you can see that the stock was doing relatively well going into May, and then of course they cited some issues with inflation. Cost was a big issue with this stock and a number of other retailers. However, the stock has sort of made a base. It's starting to rally back right now, so I do like that. We can see that the dividend is at 56 cents per quarter. If we go back, we look at where it was, 54 cents back in 2020. And then if we go all the way back to 2018, it was 52 cents. So look, it's trending higher. It's not a huge dividend grower, but it has a lot of history suggesting that it's going to do that in the future. Now, the yield has come down quite a bit. 1.47, so it's not that sexy, but it's one of those stable names that I believe are going to do well in uncertain times. It's also outperforming the market on a 1-year basis. We like that. It's above its 50, 100, and 200-day moving average. Now, if I do have to ding it for something, the next 12 months PE at 23.5 times is definitely more expensive than the market, but you know, there are some investors that will pay up for quality, and Walmart is definitely one of those quality names.
So now let's look at our big money filter, and look, this chart is definitely more volatile than some of the other charts that we've seen. There was some selling going into the year, then some buying, then some selling. Now we're starting to see the stock start to recover. They just announced some pretty strong earnings, and their guidance was actually way better than what the street expected. So the stock definitely has some ballast here. It is not a top 20 name, but given all of the numbers that we have discussed, I think this is a top aristocrat to consider in 2023. So there you have it. These are my top 5 dividend aristocrats to consider buying for 2023. Remember, none of this is personalized advice of any kind. You got to do your own research. But a lot of these names that I showcase, they have a relatively low PE. They've been outperforming the market on a relative basis. That's what you want to see, and there is big money support. Look, if you like this type of content, make sure to like and subscribe to our YouTube channel. Check out MAPsignals, some really cool stuff that we're doing with data. I'll see you guys next time.